Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Halley, Senior Market Analyst, Asia Pacific at OANDA. Jeff, good afternoon.
Hey, good afternoon, Brian. Great to be here as ever.
Thank you very much. Now we're going to take a quick look at how markets are performing across the region, and then we're going to get your insights. Now we're going to start with the cryptocurrency market. Bitcoin is at 32,931, down 5.07%. Ethereum is at 1,968.2. It's down 8.6%. Moving on to regional stock market, the SGX is at 3,107.51. It's down 0.33%. That's bucking the trend against an overall green market. Bursa Malaysia is at 1,574.9. It's up 0.16%. We've got the Nikkei, which is up a whopping 3% at 28,848.87. Shanghai Composite is at 3,556.75. It's up 0.78%. The Hang Seng is at 28,489, unchanged. And rounding off the numbers, we've got the ASX 200, which is at 7,355.8. It's up 1.67%. So markets are up sharply. What's the reason for that, Jeff?
Well, I think it's mostly the sudden 180-degree handbrake turn that Wall Street took overnight. As we know, on Thursday and Friday, Wall Street endured a couple of torrid sessions after the FOMC, and then the federal president, one of the Fed presidents, Bullard, came out and said that interest rates would have to rise sometime in 2022. So stocks fell quite sharply into the end of last week. But a reasonably dovish Jerome Powell last night at congressional testimony, pushing the transitory mantra, was enough to see sentiment very sharply turn. And we saw the Dow Jones, for example, I think it rose about 1.8%. S&P was up 1.4%. They'd been previously unloved. And that sharp turn in direction by Wall Street has pushed, for example, the Nikkei up 3.3%. I think I last saw it this morning. Australia is up about 1.6%. They were both very much in the red yesterday. So I think it's all down to a sharp turn in sentiment and a bit of FOMO and a bit of buying the dip.
Now let's talk about cryptocurrencies, and China has renewed a crackdown on cryptocurrencies. It's wiped out 300 billion from the digital currency market since Friday. Now, your forecast 2 weeks ago, and I remember from a technical standpoint, that we should be looking at a low as 22,000. What's your view today?
Yeah, I mean, the actual formation got invalidated, and I actually thought it would move back up to 40,000 or 42, which is about where it stopped. Again, it's dropped again over these last few days after China got stuck into crypto miners, and yesterday also reminded financial institutions not to process any crypto-related payments as well. Look, it's rallying this morning. It does look corrective. It looks oversold actually on the shorter-term technical. So I think we could see a bit more of a recovery, maybe up to 33, 34. But to be honest, the overall price action is still looking quite soft. 31,500 is my first support, but
Jeff, sorry, we lost you out there.
Okay, well, look, yeah, I don't know where I came up to, but basically I believe that if 30,000 fails comprehensively, we're going to move to the 20,000 area quite quickly, because that will put every long position put on since the 1st of January underwater. So I think that's the capitulation level. But in the short term, it wouldn't surprise me if Bitcoin rally, because it does look a little oversold in the short term.
Now I want to talk about commodities, and you know, oil has just hit $75 a barrel, Brent crude, which is a 2-year high. On the other hand, you see a softening in other commodity markets, you know, iron ore, copper, and so forth. What's your view on this, and what's your view on this in the short run?
Well, I believe that most commodities are being artificially depressed by China at the moment. Your iron ore is off today, copper, palladium, etc., etc. They're all being artificially depressed by China. But oil has continued rallying. Now, I believe that's a sign of underlying strength in the global recovery story. As the economy around the world recovers, oil by default consumption should rise, and that should be good for prices. And I think that's what we're seeing. That's a market that China can't really mess around with. In the longer term, I think commodities will join oil in moving higher again as well, simply because China is a price taker at the end of the day, and they can only affect these markets in the short term as they release strategic reserves and do their clampdowns within China. So I think this commodity sell-off will be temporary, and oil is strongly signaling that. And I believe that oil will continue moving higher this week. Even when the dollar strengthens, oil still goes up. So I think there's a lot of power in this rally.
Now, Jeff, a much broader question now. Where are the opportunities for investors and traders this week who want to profit from, obviously, volatility in equity markets, interest rates, as well as, of course, commodity markets?
Yeah, and currency markets. The dollar reversed course very sharply overnight as well. I think for your viewers, they need to understand that the very sharp 180-degree turn of the markets overnight is indicative of a market that's sort of chasing its tail. So it's a day trader's market. So for me, it's literally a case of, for a cliche, buying low and selling high intraday rather than trying to pick out trends, because if the market can turn so sharply overnight, it can turn exactly the opposite way tomorrow night or later today. So it's very much a day trader's market. It's exacerbated by the fact that we have a very light data calendar this week. So the market's left to headlines, intraday sentiment, Fed speak, etc., etc. So day traders market this week.
Now, Jeff, thanks for speaking to us.
Always a pleasure, mate.
Now, we've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out our LinkedIn and Facebook pages, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks for tuning in.